Hey everyone, and welcome back to another video for today. In today's video, we have a lot to talk about. We have Oracle's earnings report, pretty good one, some signs of accelerating growth. Maybe the market might be a little bit less skeptical right now, although it's always good to still be skeptical, especially when we're talking here about a backlog of over $500 billion and a company with a lot of debt and negative free cash flow. We'll summarize everything you need to know. We have CPI numbers. We'll go over that. We've got Nebius and NVIDIA news. Very happy with that. A press release from CoreWeave that got released late last night. It's not such a big deal, but we'll cover that as well. The market seems to be very green at the time of making this video, so we're all much happier where things are greener. And we do also have some Uber news as well. Uber has been literally flying under the radar. Stock has been staying around $75 or so for quite a long time. The company continues to execute, so we'll touch on that one. Right now, let's start off with major overview of what's happening today. All right, so first up, let's look at the heat map. Financials still under pressure right now, have been under pressure for the last couple of months, but over the last couple of days, it has been under even more pressure on fears of stagflation. Of course, there's also fears on the private credit market. So you see this segment being pretty red. As for the tech companies, AI companies, those are getting a little bit more love these days. Even crypto right now, if we can pull that one up, is also back in the green. Bitcoin above 70,000, ETH above 2,000, Solana is in the green, Ripple is in the green as well. Not by much, but hey, I guess we'll take what we can get right now. As for big tech companies, we can look at that as well. Most of them are green. The only one that's red is the only one that was green before, which is Netflix. As for the Neo Cloud, Nebius is up 15%, Iron is up 10.5%, White Fiber 9.5%, CoreWeave a bit of the same, Applied Digital 5.8%, Core Scientific is up 5%, Hut 8%, Cypher all up 5%, probably because of the Oracle earnings report and also because of the Nebius news. As for FinTech, a lot of green, but also some red, all less than 1% in the red. Dave, MasterCard, New Holdings, New is back under $15. Adyen is a little bit red. Visa, Shift4 is basically red to flat. Then all the rest are a bit green. The one that's up the most is the one that's been very volatile. It's Klarna. Then we have Sezzle up 3.2, Chime is up 2.2, Affirm is up 1.2, PayPal is up 8% right now. Yesterday, PayPal did have an analyst conference. Jamie Miller, the CFO, was talking there. Did she say anything interesting? No. More of the same, so nothing new. As for the semiconductor names, we've got green across the board. Broadcom is a little bit red right now, but all the rest are green. Switching to oil real quick, as you can see, it's up 1.8% right now, still around $85. But the International Energy Agency agrees to release 400 million barrels of oil to address the Iran war supply disruption. A week from now, we have the next FOMC meeting. No surprise there, 99.3% chance of no cut. Looking at the inflation data that got released earlier today, headline CPI up 0.3% month over month, up from the 0.2 in January, up 2.4% year over year. That's unchanged from January. Those numbers came in line. Core CPI, excluding food and energy, up 0.2 month over month, down from 0.3 in January, up 2.5% year over year. That remains unchanged. As for energy, that was up 0.6 month over month. Gas is up 0.8, natural gas 3.1, food up 0.4 month over month, food at home also up 0.4, and away from home 0.3. And as for shelter, up 0.2 month over month, rent increased just 0.1. This is the smallest monthly gain since January 2021. Of course, all of this data is, well, a bit useless right now, because we want to see what happens a month from now when we get the data for the month of March with the impact of higher energy prices. Now, before jumping into Oracle and the rest, if you enjoy this type of videos, hit all the buttons. You know what to do. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, Oracle, one heck of a year and a half for the company. Year to date, the stock is still down 13.7%. Over the past 12 months, it is up 17.1%. I know people were shocked when I said this, but it's still experiencing a drawdown of 48.6% since, of course, the peak of last year. Now, as you know, the problem with Oracle is the fact that free cash flow thrown out of the window, debt is increasing. Why is that? Because they see the huge opportunity ahead. They have a huge backlog. And yes, right now they need to invest, they need to spend in order to grow. You know what Jensen has been saying for quite a while, the more you spend, the more you'll make. And so if we go and have a look at what has happened, we'll dive a little bit deeper, but you can clearly see that this was a quarter where we see finally a clear acceleration in growth. Revenue increased 21.6% year over year. That's way better than the 14.2% we've seen last quarter. Cloud revenue also continues to accelerate, 43.5% year over year growth. Software revenue, small acceleration there, not huge growth, but still up 3.2%. Then we can see the backlog continues to increase. It increased $29 billion quarter over quarter. Of course, the year over year growth rates are slowing down because the number has become so big. But on that extra $29 billion, they did tell us something very interesting and very important. And of course, all of this is available to you on fiscal.ai. There is a link in the description and in the pinned comment. You'll get 15% off if you use it, and new users will get to try Fiscal Pro for free for the first 2 weeks. And so what did we get for the quarter? We got 22% year over year growth, revenue $17.2 billion, beat the $16.9 billion estimate. EPS $1.79, also beat the market's expectations. Cloud infrastructure up quite nicely, 84% year over year. AI infrastructure revenue up 243% year over year. RPO is up 325% year over year. Fiscal year guidance was raised to $90 billion. Analysts were expecting $86.6 billion, so that's an increase of 34% year over year. This is a big company that is now growing faster. That's exactly what we've been waiting for. They said in Q3, this is the first quarter in 15 years where both organic total revenue and organic non-GAAP EPS grew at 20% or better in USD. And here comes the important part. We can clearly see that cloud revenue continues to grow and grows quite nicely. Remember, 2 quarters or so ago, they gave us this roadmap for Oracle Cloud Infrastructure revenue. Fiscal year 26, which is the fiscal year we're in right now, they're expecting $18 billion from that segment, 77% year-over-year growth. Fiscal year 2030, they expect to reach $144 billion. Of course, that's a huge difference here. And if they can make it, then yeah, today the company is quite cheap. And look, right now, they're on track to reach that $18 billion for fiscal 26. Oracle Cloud Infrastructure came in at $4.9 billion. Last quarter, I think, was 4.1, and the quarter before that was a little bit less than that. But at current pace, especially at the current run rate, they are exceeding that number quite easily. Fusion and NetSuite, $4 billion. And so this is what you're getting for cloud revenue. Basically, add both of them up, you're at $8.9 billion. In order to continue to grow fast and recognize the revenue, well, this needs to happen. They said we delivered more than 400 megawatts of customers. 90% of that committed capacity was delivered on or ahead of schedule. Right now, this is a company that is, of course, bleeding money, a lot of debt. And so the faster that they can recognize revenue, the better. As for the RPO, huge growth. What did they say? We have signed more than $29 billion of contracts since then across multiple customers. Using that new model, a combination of bring your own hardware and upfront customer payments enables us to continue expanding without any negative cash flow from Oracle. This is probably one of the most important parts here, is the fact that RPO contracts increase by quite a lot, but that doesn't mean that Oracle needs to burn even more money. Because as you can see, this is the problem right now. This is free cash flow at the moment, plus what the market expects for the next coming quarter. We did a quick math here. Q2 last 12 months, so what was told to us 3 months ago, operating cash flow $22.3 billion, capex $35.5 billion, and so free cash flow, again, 3 quarters ago for the past 12 months, back then, negative $13.2 billion in free cash flow. Right now, Q3, also taking the past 4 quarters, operating cash flow 23.5 billion, capex 48.3 billion, and so negative free cash flow of $24.7 billion. That's an increase of $11 billion. Now, of course, this is a problem as of right now, but based on the comments, based on the new structure, well, if they can continue to accelerate and grow at this pace, we should start to see free cash flow losses start to moderate. They also told us that Oracle achieved 32% gross margin on AI infrastructure in Q3, better than I think the 30 or 31% that they were expecting. So that's great. Then multi-cloud database, Oracle database in AWS, Azure, and Google, those are 60 to 80% gross margins. They also told us that multi-cloud database revenue grew 531% year over year. Of course, that's a small base, but if that continues to grow that fast and we get these margins combined, then yeah, the margin profile of Oracle will look much, much better in the future, and the fears of this company never turning a big profit goes away. Now, currently, if we look at the chart right here, we can see that the stock did go above that 50-day moving average. It is now back under it. We've seen a lot of gaps with this name every time there is an earnings report. More recently, it's a gap down. Now it's a gap up, same as last year when the company was worth close to $1 trillion. But right now, yes, this is already a good start. Whatever happens with the stock, I don't know in the short term, but what I do know is finally the business is definitely showing some good signs that things are going in the right direction. Moving on to Nebius, and by the way, for people asking, so why aren't you investing in Oracle? Well, like I said yesterday in the live stream, when you look at Oracle, I always ask myself, why buy Oracle if I already own Nebius, if I own Amazon, Alphabet, Meta? Are these names not better than Oracle? Not to say that Oracle will not do well, but as someone that owns other names, I don't see why I should be owning Oracle right now. Yes, market cap wise, of course, it's much smaller than the big tech players. But from a forward multiple perspective, you're not really paying that much less. Plus, you have a little bit more risk. Now, Nebius, one of my favorite names here, NVIDIA and Nebius partner to scale full stack AI cloud. NVIDIA will invest $2 billion in Nebius, reflecting NVIDIA's confidence in Nebius' business and unique depth of engineering expertise across the full AI technology stack. Another big win for Nebius, another, well, I told you so, I guess. This also enables Nebius to deploy more than 5 gigawatts of NVIDIA systems by end of 2030. This is big news for Nebius. This is just confirming the thesis that we've had for a long time. This is why, and I'm not having a dig at any of the other names out there, but every time I've seen people try to put this sports mentality, putting Nebius against Iron or this against CoreWeave and blah, 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 like guys, there's really no comparisons here. We're talking about a team that has already built a multi-billion-dollar business in Yandex before. They already have all the engineers. They are doing things much differently, and it was quite clear. And this again just reinforces that. So not surprised that Nebius is up 16% on the day. As you know, this is great for the stock, great for the sentiment, etc., etc. Maybe this will also attract way more customers. This will definitely allow Nebius to grow even faster. But when we're talking about building data centers, there's one thing that, well, money cannot buy, and that's the fact that you need time. You need time to build and deploy all of those huge clusters. Moving on to CoreWeave. By the way, all of these names are up. Okay, good announcement for Nebius, good quarter for Oracle. Sentiment around those names changes. But remember, from a business and financials perspective, there's only one name that changed here, and that's Nebius. CoreWeave yesterday announced this. They introduced flexible capacity plans to accelerate AI innovation. Basically, this is a flexible pricing menu, something that you've seen with AWS, with Google Cloud, with Azure, and even with Nebius. I think Nebius offered this already quite a long time ago. I don't think this should have been a press release or anything that really changes things for CoreWeave. Okay, cool. They're moving in the right direction, but it's not something well, groundbreaking. They said this right here. We are bringing the original promise of the cloud, scale and efficiency back to the AI pioneers pushing the limits of innovation. Again, flexible pricing and all of that is nothing new. But okay, cool. Moving on to the last thing here, and that's Uber. So Zoox, which is that, well, basically this, owned by Amazon, Zoox and Uber announced strategic partnership. So Zoox Robotaxi will be deployed on the Uber network in Las Vegas starting this summer and in Los Angeles in 2027. Again, reaffirming our thesis here on Uber that there are going to be a lot of AV players, and most of them, if not all of them, will list their fleets on Uber because they have the distribution. And when you have the distribution, well, you know that your vehicles are going to be used way more and your return on investment will be much higher than if you do this on a standalone app. Some people still remain skeptical here, but hey, every single time this happens, this just reaffirms that thesis. And so if you are in the US for the World Cup, I assume in Las Vegas, you will be able to try this out already today, but in the summer and next year in Los Angeles, you will be able to do so through the Uber app. Uber is up 2% on this news, plus also on Bank of America that reiterates a buy rating on Uber with a price target of $103 as Uber Eats raises fees. The analyst comments, effective March 11, Uber Eats is raising marketplace fees across key tiers, primarily in the United States, marking the first material reset in years as the platform seeks to offset higher operating costs and reinvest in demand generation and courier reliability. Okay, I guess if they feel comfortable in raising fees, that means that they know that even when they raise the fees, people are still going to be using that app, or maybe they will just become Uber One members, which of course is very profitable for the company. Right now, Uber is stuck under that 50-day moving average. It tried to tackle it a couple of weeks ago, no, actually 5 days ago, looks like a couple of weeks ago. Back here at around $78 per share, we're now at $74. Stock was a little bit higher, we're still up 2.2% right now, based on what the company is expecting to do in 2026, based on the numbers that it has reported already. This is, yes, in my opinion, a cheap name. If you believe in the thesis, if you don't, skip it, go buy something else. And so all in all, that's about it for me in today's video. Oracle's earnings report, pretty good one, good messaging as well. It's a big player in this whole AI ecosystem, so it's nice to see that this one is finally going in the right direction. It definitely helps the whole ecosystem. It helps all of the other AI stocks. The Nebius and Nvidia news is of course very good for Nebius. Yes, the other stocks are going up on that news as well. We know that CoreWeave and Nvidia have some kind of the same relationship, so that's good. Market is now maybe thinking, okay, we've had CoreWeave, we've had Nebius, maybe Nvidia will pick a third player, remains to be seen. So far, so good. I still expect a lot of volatility over the next couple of days. Use that volatility to your advantage. That's about it for me in today's video. Leave your thoughts down in the comment section below. See you all in the next one. Bye-bye.